Happy Monday, everybody. I hope you had a great weekend. There's a lot going on, to say the least. I'm going to review last week's market action, and we're going to preview the week ahead. Today is September 22nd, 2025, and this is your Monday market update. Markets opened the week higher and pushed to fresh records as traders looked ahead to Wednesday's FOMC decision. The backdrop was dominated by two forces. U.S.-China headlines. President Trump and Treasury Secretary Bessent both noted that trade talks in Europe were going very well, easing some concerns after Chinese regulators accused NVIDIA of violating anti-monopoly laws. That headline hurt NVIDIA early, but optimism around broader trade relations muted the damage. And then also Fed anticipation, of course. Trump publicly pressed Powell for a bigger than he had in mind rate cuts, a reminder of the political pressure for aggressive easing. On the corporate front, Tesla rallied more than 3% after Elon Musk disclosed a personal billion-dollar stock purchase. Meanwhile, chatter picked up on the potential U.S. purchase of TikTok assets, adding to the buzz. Like I said, a lot going on. Economic data even added to the fuel. The Empire State Manufacturing Index cratered to negative 8.7 versus a positive 4.3 that was expected. It's the first negative reading since June. Bad data, of course, was good for stocks. It raised the odds of a meaningful Fed action midweek. By the day's end, the breadth was strong. The markets held gains despite late headlines about possible new tariffs on steel and aluminum. The Dow was up 1/10%, S&P 500 up 0.5%, the Nasdaq was up 1%. Tuesday, the big macro story was August retail sales, up 0.6%. Headline versus 0.2% expected and 0.7% in the all-important control group. This showed consumers remained in solid shape, bolstering confidence in growth and discounting fears of a slowdown in spending. Back-to-school shopping and online sales led the way. Offsetting the good news, the housing market index slipped slightly, and bond yields rose on the retail report before retreating. Traders also had one eye on Washington. Trump nominee Stephen Moran was sworn in as a Fed governor, seen as a hawkish voice, while rumors circulated of a U.S.-China negotiations on TikTok and the acquisition deal there. The market whipsawed, opening strong, selling off on higher yields, and then recovering in the afternoon thanks to a strong 20-year Treasury auction. Still, profit taking in the Fed meeting capped momentum. The Dow was down 0.25%, S&P down 0.1%, the Nasdaq was down 0.1%. Pretty quiet overall. Fed day, that brought what was expected. This was the first rate cut of 2025. 25 basis point cut as expected. More important than the cut itself was the signal. Powell and the statement confirmed that a rate cut cycle has begun, citing growing labor market risks even while inflation remains elevated. Markets staged dramatic intraday swings. The morning, negative headlines from China, banning AI chip purchases aimed at NVIDIA, pressured semis in the Nasdaq. Afternoon, when the FOMC statement hit, small caps ripped higher on rate cut optimism while tech fell further. And then late in the day, Powell's press conference emphasized downside risk to employment, which reassured some traders, but also highlighted uncertainty. Index bounced off their lows, but couldn't fully recover. The net result was a mixed finish. The Dow, more cyclical, and financials heavy, closed higher, while the S&P and the Nasdaq ended mostly lower. Dow up 0.5%, S&P down 0.1%, and the Nasdaq was down 0.25%. Thursday, markets roared again after NVIDIA announced a $5 billion investment into Intel, a stunning show of confidence that sent Intel shares up as much as 28% intraday. That move lit a fire under semiconductors and broader tech, extended the AI enthusiasm that has defined much of this year. Economic data reinforced the bullish tape. Jobless claims fell to 231,000 versus 246 was expected. That is a sharp reversal from recent multi-year highs. The Philly Fed index surged to 23.2 versus 3.0 was expected, with new orders and shipping components showing impressive strength. Together, those reports helped bolster the soft landing narrative, calming worries that the Fed was cutting into a weakening economy. By the close, S&P, Dow, and Nasdaq all finished at record highs, powered by tech and small caps alike. The Dow was up 0.25% of 1%, S&P 500 up 0.5%, the Nasdaq was up 1%. Stocks extended gains into Friday with another trio of record closes. The tone was supported by lingering AI momentum and upbeat reactions to Thursday's economic data. FedEx added fuel with a strong earnings report, citing cost cuts and resilient shipping demand. Globally, attention turned to a planned Trump-Xi call on trade. Bond yields ticked higher as investors weighed whether Thursday's strong labor and manufacturing data might limit the pace of additional cuts. Under the surface, however, Dow theory did flash a warning, while industrial surge transports lagged badly and remained negative year to date. According to the classical interpretation of that Dow theory, that divergence suggests part of the economy, shipping, travel, and logistics, are all still struggling. Still, markets closed the week on a strong note. Dow was up a third of 1%, S&P up half of 1%, the Nasdaq was up 3/4 of 1%. For the week, the Dow closed up 1%, S&P up 1.25%, and the Nasdaq was up 2.25%. Overall, for the week, we had the first Fed rate cut of the year, stronger than expected consumer spending, resilient labor market signals, AI-driven optimism. All of this carried stocks to all-time highs. Small caps, cyclicals outperformed, transports lagged, and commodities stayed choppy as yields moved higher. The run-hot economy thesis gained some traction. Steady growth, sticky inflation, now lower rates. Let's preview the week ahead now. Let's see what's going to happen. Key catalysts in the coming days. Core PCE is going to be Friday. That's going to be the big one. The Fed's preferred inflation gauge expected to be up a little bit going into that's month over month. And of course, the Fed heads are into a heavy calendar. This is actually the big news of the week. I think you're going to hear from Powell himself on Tuesday. The rest of the week, we're going to hear from pretty much everybody else. Williams, Musalem, Hammock, Barkin, Mirren, Bowman, Bostic, Daly, Goolsby, Schmid, Barr, and Logan. We're going to get also a few earnings, Micron, Costco. Those are the standouts. Investors will watch whether the data confirm a run-hot economy or it challenges the Fed's new dovish tilt. The Fed has started cutting. Consumers still spending. AI investment continues to power tech and sentiment. That's a supportive environment for equities, but divergences in transports remind us not to get too complacent. Staying balanced across growth, cyclicals, and hard assets remains a key. As we close out the Jewish year, I wish all of you a happy new year, and may this coming year bring clarity and peace. Have a great week.